Just how far can NIO stock go in 2021? What a great week we have had for NIO stock. This week we saw a huge run up following last week's strong earnings report showing better than expected increases in revenue and operating margin, taking NIO another step closer to making a profit. But today we saw another great piece of news coming out. This time it is market research company J.D. Power ranking NIO second in their J.D. Power Innovation Rankings, specifically focusing on the Chinese car companies. This innovation index is based on how car owners perceive the technological innovation of their car brand, and it just seems like NIO owners just love the way NIO is advancing right now. In this video, we will also go through whether I think it is too late to buy NIO stock right now, and also what price targets I have for years to come. If you're new here, by the way, my name is Sam and welcome to the channel. If you find this video valuable, I would appreciate it so much if you press that like button. It just helps out my channel a lot and helps me reach out to more people. Also subscribe if you want to see more NIO and other stock updates and predictions. We're a growing community and I would love to have you on the journey with me. Now back to NIO. So let's start off by looking at the movements for the stock. I already said it in my last video, but we have had yet another positive week. On Monday, before the market opened, we were at a share price of $49.25, and on Friday we closed all the way at $54. Almost another 10% gain, and I really think it's fascinating to see how people are slowly becoming desensitized to these kinds of crazy returns. Bullish movements that are this strong are quite rare in a company as highly valued as NIO, so we should really be thankful for them. Instead, I saw some bearish articles talking about how this marks the end of NIO's run-up and that a crash is coming in the stock. I have heard these same arguments since NIO's share price was barely above $20, and they kept repeating them as NIO went to $30, $40, and now finally $50 a share. I mean, sure, obviously we can't expect to go up 10% every week for the next year. That would lead to NIO going up something like 14,000%, but rather I enjoy holding a stock that I believe in for the long term. A stock that I think can easily at least double in share price in the coming year, and I think that is really the optimal mindset you need to get into when going into this company. A mindset of focus and patience is really the optimal investor mindset. So let's look at the main piece of news for this day, and that is that NIO managed to take the second spot in providing the best tech experience among automakers in China, behind Land Rover and far ahead of Tesla, according to the inaugural J.D. Power China Tech Experience Index report released on Thursday. The study focused on the vehicle owner perceptions of 26 advanced technologies when they are first introduced in the market. The Innovation Index measures how effectively each automotive brand brings these technologies to the market, measured on a 1,000-point scale. According to this report, the industry average level of the Innovation Index is 549 points, and this year there are 20 car brands above this industry average, among which Land Rover and NIO scored 661 and 648 points respectively in the top two. It is definitely worth mentioning that NIO launched its Battery as a Service (BaaS) program this year, which allows users to buy NIO cars without batteries by simply renting a battery every month, which reduces the cost of purchasing the car and making them more affordable. NIO founder William Lee Bin has previously said that Tesla is a good company but not insurmountable, and now it seems that NIO has surpassed Tesla, at least in this ranking of automotive brand innovations. Now, I want to add that there might always be some bias in these kinds of studies, and I really feel like Tesla deserves a higher place than the number 12 it got. And it kind of does make sense that China would like to have their own car brands to rank higher, but hey, with that said, Land Rover was ranked first in this report and they are British registered, so definitely not Chinese. Additionally, we had a bunch of other Chinese car companies being much lower ranked than Tesla, so take from that what you will. So is it too late to get into NIO right now? I really don't think so, and I think there are major catalysts coming that could keep driving the share price and show investors just how much potential this company has. Heading towards the Chinese New Year, Deutsche Bank analyst Edison Yu says that investors can expect robust monthly delivery volume driven by demand for NIO's new EC6 electric SUV and the company's 100 kWh battery option. NIO is forecasting Q4 sales materially ahead of the consensus estimates, with anywhere from 16,500 to 17,000 cars expected to be delivered in the quarter. And production capacity is ramping faster than expected as well, with NIO reaching perhaps 7,500 cars produced per month by January, and as the company continues to scale in size, Yu is looking to see NIO produce and deliver as many as 92,500 cars in 2021, and I have seen estimates of even above 100,000 and even some to 150,000. But at the same time, NIO manages to improve its gross margins even past what is expected to see in Q4, to greater than 20%. But despite this, the analyst expects NIO to lose money next year, around $1.2 per share's worth, just as it will lose money this year. But even the more conservative analysts think that this company has tons of potential, but they kinda want to see it grow into this valuation. Sales in 2022, for example, could be up as much as 40% over 2021, which would absolutely justify today's valuation from a value perspective. And we obviously have a growth premium in NIO right now because of this fact. We have to be willing to pay up a bit extra, at least in my opinion, if we want to see and follow this crazy potential for upside. And guys, even Edison Yu, who also has this conservative sentiment, predicts that NIO will emerge as a major winner in the China auto market by the middle of the decade. And he therefore calls NIO a must-own growth stock for growth-oriented and ESG investors. So no, even though it doesn't feel too good to buy a stock that has gone up 100% in the last couple of months, the focus should rather be, in my opinion, what you think NIO should really be worth. And if you share my opinion that NIO will keep meeting their own expectations and that they have the potential to play in the big leagues with Tesla, then a $100 share price by 2021, and if they can keep up with the increases in revenue, a $150 or even $200 share price in the very longer term should not be out of the cards. And with that, I want to conclude today's video. If you enjoyed this one, make sure to give it a like. It helps the algorithm, helps me reach out to more people, and is simply the best way you can support me. I really love to talk about my passion, and hearing the feedback from you awesome people really encourages me even more to just keep going. Also, if you have watched all the way to this point and you enjoyed the content, of course, why not subscribe and join us in the journey to hit 10,000 investors by the end of this year. Thank you so much for watching and enjoy the rest of your day.